Hello and welcome to another episode of Wealthi UK. This week I've got Charlie from API Global, who is the regional director of API Global, in fact, for Europe. And he's also the managing director of Red Squirrel, hence the Red Squirrel signage behind him. But Charlie, it's great to have you here. How are you going?
Yeah, it's good to see you. Thanks for having me again. I think it was a few months ago I was last with you, wasn't it? I can't really remember, but it was a few months ago.
It's flown. It felt like, or it feels like it was only a couple of weeks ago now, but it's been about 3 or 4 months. It's incredible to think how quickly it's flown.
The market's flying, isn't it? So it's just non-stop at the moment.
You've been staying busy. How have things been going at API Global? How have you been finding the market, and where's the interest really lying at the moment, to get straight into it?
Yeah. So in terms of on the API side of things, it's not slowed up. I mean, I think probably most people in the UK English property market will replicate the same thing in terms of the demand is there, and it hasn't slowed down. So I think, and I'll give you some examples, because I think people always like to talk about certain areas or certain things, but there was, if you could look at Liverpool, I mean, the last 12 months, it's had a peak trough around 42% increase. Phenomenal. Those sorts of things are phenomenal. What we saw over the last few years at the Northern England, the Liverpool's, Manchester's, Birmingham's, etc., performed extremely well. Liverpool stood out above all in the last 12 months, to be honest, out of all of them. Manchester performed really well again, in Birmingham. The whole Manchester area has performed well because, I mean, you and I, Chris, have talked about ripple effects in the past, and we've talked about London and how that filtered out all the way out into Winchester, Reading, and all of the other areas. So what we've seen in Manchester, same thing. The Manchester, oh bless you, someone's sneezing in the background. So what we've seen in Manchester is the same ripple effect. So the centre really saw the heights, and now it's filtering out towards the outer skirts of Manchester. So it's been phenomenal, to be honest. But yeah, Liverpool's probably the standout performer in the last year.
Yeah, it really has. When you look at the Zoopla report that comes out every month, and you just monitor Liverpool, and I think it went from a 7.6% increase last month to about 10.5% increase this month. So it's showing no signs of slowing down anytime soon at the moment, which is great to see for the UK market as a whole. But yeah,
I think if you look in the history of investment, I know you guys obviously focus over areas, but if you look at the history of worldwide property, the UK is always outperformed. So whenever there's a crisis or uncertainty, property is always solid, because the longest it's ever taken for equity value to double is 15 years. So, it's always a solid investment. So as soon as there are uncertainties in certain countries, England is a place that people look to invest in. So it's a great, it has been, would I have said it would have been as good as it's been when COVID started? I was definitely positive because I knew historic trends, and I spoke to you about it back when it started, and I told you it's going to be fine. Like, UK property will always perform well. Did I think it'd be as good as it's been? The honest answer would be absolutely not. I mean, gosh, it's definitely far exceeded my expectations.
That's true. No, I agree with that. I think Manchester's an interesting one as well, because it's still seen some very solid price growth. I think it's about 8.6% for 12 months to now. And so we've seen some solid price growth there. But then you look at things that have affected its livability, for example, and obviously UK was quite a horrible place to live during lockdown. We were kind of, copying the worst of the pandemic and everything that was going on. So it dropped down, exactly. And it dropped down in that list of livable cities in the world. I think it's now ranked, from memory, 54th in the world, but it still makes it the UK's most livable city. But think about when we are really, really back to normal. Okay, there is a sense of normality at the moment, but I still feel like there's a little bit of a way to go to get to that normality again. And I can see there being almost a second wave with the Manchester market, more interest from international investors looking to get into the UK market. And now that Manchester holds the second, you could say the second strongest economy in the UK as well. So it's ticking the boxes from a business standpoint, a corporate standpoint. You've got big businesses moving into Manchester. The borders are open. They're seeing, or they're going to be back to normality again, and seeing a massive influx of travellers back into Manchester. So I can see that livability standpoint going back up again, improving its rankings, getting back to 35th, 40th in the world. We're going to have international students come back to the UK as well, and back to Manchester.
Yeah.
And University of Manchester now having one of the top ranked unis in the UK, and I think it's ranked in the top 30 of international universities. So there's lots of things. Manchester's really piquing my interest at the moment. Not to say that Liverpool isn't, but there's things at the moment in Manchester I think we could experience a bit of a second wave for the market in Manchester in terms of investment. Be keen to hear your thoughts on that, but that's kind of some observations that I've made.
Manchester has performed very well, as you've already mentioned. Even though it already had a strong growth over the last 6, 7, 8 years anyway, some people were suggesting it might have slowed down. But, when you can see the peak troughs of things have been at 62% over the course of the year, it's just crazy, really. And then, even in the last month, we've seen it consistently improving month on month. I think you covered all the things as to why Manchester's got that drive. You've got lots of different parts. You've got large businesses, ITVs in the world who have all moved there. So they're filming. Not only have we got all of the students and everyone returning and bits such as that, but you've got large businesses that have relocated there.
Exactly.
There's a huge investment from the UK that have gone into Manchester to be all of the northern areas are meant to be the sub-cities, but Manchester has really, they set the trend at the start, and they're staying ahead. They started this whole project, and they are most definitely keeping there. And I think it's only going to get better. And there's some really good developments and plans in the pipeline for the whole of the area. And I think what people forget about Manchester is it's a large. I talked about the ripple effect briefly already, but it's a large area. I know that's self-explanatory, but I think people just think about the centre. But there's far more to Manchester than people realise.
I agree, and when you just drawing on that point from memory, I think there's about 7.5 million people that live within an hour's drive of Manchester. So that's just that's incredible. That's almost London's population in an hour radius of Manchester, which essentially makes it a London of the north. You could say it's incredible.
That's what people don't realise. People just do not realise that. But then obviously a lot of overseas investors have, over recent years, a lot of overseas investors see this and think, okay, I want to be part of that. So some do, but I think the vast majority don't always realise that. It's
an interesting point. I think Manchester's definitely got a lot of potential for the next 6 to 12 months, no doubt. Be interesting to see what is going to happen in terms of that rippling effect that you mentioned and how it does continue to expand. And
we're quite intrigued in Newcastle's another one that I think we're quite interested in getting a couple of good developments there, because although not everyone likes football, but the thing is, if we go back to Manchester when the takeover of Manchester City happened, the influx of investment from them in the local area was phenomenal. I mean, if you surround the Etihad area, the investment is brilliant, and it's driven businesses and population and all sorts. And the signs at the moment are that the Newcastle owners are going to do the same, and that can only be good. Newcastle's a very special city in terms of the way the individuals are there. They live and breathe it, football, and the plan is to invest largely. So that would be really interesting as well.
I think it will be.
That would be. I'm not on about today, but over the course of the next 5 years, I think that would be an interesting one, and we're definitely trying to find something there for our investors as well moving forward as well.
I think it's a great opportunity in Newcastle at the moment. It's you can get in before we've seen any wave or this new wave of Newcastle. It's got the foundations of what a great city consists of. It's not far behind the likes really of your Liverpools and Manchesters and Birminghams, but they just need that investment, the infrastructure investment chucked into the city now. And I think that now that, like you're saying, the Newcastle takeover has happened. And as ridiculous as it sounds to some people who may be listening, the impact that football in the UK can have on a city is immense. And as you mentioned, they're willing to chuck money into investment in the city. As we saw a couple of weeks ago, a week after the takeover, they committed £250 million to a green energy project.
Absolutely.
And I know that's just outside of Newcastle, but nonetheless, it's there for a reason. It's going to serve a purpose for Newcastle.
Absolutely.
So I agree with that. I think there's a lot of opportunity. And from a price point perspective too, you can get in and buy yourself a quality investment for let's say under £100,000 at the moment. It's incredible from a price point perspective.
Yeah. It is from the entry point in Newcastle. Like I said, we just got to go back to what Manchester City owners done for the area. It will probably, I'm not going to say it'd be a mirror and image, but you're going to see an increase in value. Well, you can't put that sort of investment into an area and not see the repercussions in there. So it's really, really good. I mean, most of the northern areas are still sort of setting the trend. They're the Midlands and the northern areas. They're still setting the trend for the English market, but that's just purely because of the amount of investment going into it.
I agree. What are your current feelings and opinions around Birmingham? I still think it's a very good investment. I think it's soon going to be classed as one of those places like London, in a sense that once you've got your foot in the door in Birmingham, you're going to benefit from some good growth over the long term, some decent rental yield, and there's some awesome projects happening in Birmingham at the moment. What's your take on it?
You've already seen it.
Yeah,
you've already seen it in Birmingham. I mean, it's Manchester and Birmingham have sort of been, the ones that have been ahead of everyone else over the course of the years. But the thing is, what people do forget, the HS2 line is still happening.
Yeah,
and
exactly
that is going into Birmingham, and as soon as that's done, that will give all of the properties an instant boost anyway. Irrelevant as soon as in terms of a market value. So I think where the HS2 line project's been going on for a little while, people again they forget, but it's a really important point. The HS2 line is going to bring
100%.
all of the cities together, and it evolves around Birmingham, and
exactly
you can see that. And again, the ripple effect has happened because it's gone out to Solihull. I think Solihull in the last 10 years has been the best place to live in the country 3 times. So, I mean, it's got areas such as Solihull that the ripple effect's going out to. So at the moment, you can get into places like Solihull at a reasonable cost. Not Newcastle prices, but a reasonable cost. And you realistically still have huge growth to look forward to, because naturally, as the UK market goes, it will increase anyway. But when the HS2 line is complete, they predict a 30% increase in the line.
Wow!
Just because of the 2 line. Whether it's 30% or not, see. But nonetheless, there will be no doubt an increase, because suddenly it brings everything together. It becomes the centre of all of the new multi-city northern powerhouse plan.
Yeah, and it adds that sense.
So I think it's a great one.
Yeah, and you've got the commutability to London. And, it's possible at the moment, but it's an hour and 30-minute commute at the moment. But with HS2, it's going to be, as they're saying, 49 minutes or 48 minutes, whatever it may be. But nonetheless, that makes
a big difference.
Half your travel time, and you can be in London. So I think that it's, like you're saying, there's going to be a lot of opportunity off the back of HS2. And I think the Commonwealth, even short term, the Commonwealth Games next year is going to be massive for Birmingham as well. It's going to give them international exposure. It's, there's these great things to look forward to for Birmingham. And then Smithfields.
Again, people forget about that.
Yeah, exactly. I'd almost let that one slip as well until a couple of weeks ago. But you realise that there's a lot happening in Birmingham. it's an exciting place to have an investment at the moment, most definitely. And I think, the Smithfields Smithfields project, the Smithfields regeneration project that they're working on as well, that's going to be very impressive once that is all finished off later on down the track. But nonetheless, it's creating more activity for Birmingham and a reason why people should visit Birmingham as well. And I think that's what's important. We want to get more people on the ground in Birmingham so that they can see what it's about and see how it has evolved. And it's not the industrial workplace that it once was. It's changed to a corporate, professional, top class or top tier city now. And
universities,
exactly.
Some great universities, hospitals, all it's all going for it. All going for Birmingham. I mean, there's so many positives, but all of that investment evolved around that HS2 line as well.
Exactly, I agree. And it actually, in regards to HS2, I was trying to find some updates on it in regards to the link from Birmingham to Manchester and Birmingham to Leeds and so on. But it seems as though on government websites they're kind of claiming it's still going ahead up to Manchester and Leeds and the likes. But when you read the articles and there's talks about funding problems and it's pushing the budget out, and the 56 bill that was allocated is now not going to even fund the Birmingham connection. But have you heard anything in regards to the connection from Birmingham to Manchester, and if that is still going ahead?
As far as there's nothing official to say they're not. Okay. As far as they're doing. Look, the problem I think we get with TV and articles is there's a lot of scaremongering that goes on in England. It's a very, unfortunately, English way. And media like to comment on things even if they don't have the facts. People like to write things even if they don't know what they're talking about. The honest answer is they've definitely gone over budget. I mean, there's no doubt about that. But then when don't they? When don't they go over budget when they plan things? But they've committed far too much money to not make it happen. That's the other thing. To not make it happen now, it will go down as one of the biggest failures financially that they've done, that the government have done. So they can't afford for it not to be finished now. So they will do. I mean, the problem is they're still claiming it's going to be done on the same timeline of what they originally stated. That's what I think will be different. I think the timeline for the Manchester side will not be when they stated. The Birmingham one will, but I'm not convinced they genuinely will be able to keep to that timeline. But they've got, my point of view, they've committed far too much to not do that now. There's too much gone.
Exactly, it's like washing 56 bill down the drain and forgetting it never happened. Brush under the carpet. They can't go back now. I guess the link from the tracks are down from London.
They've made people move homes.
Yeah.
That's it. They've made people move homes. They've took them out of the homes. It's too much has been done. But I would be surprised they keep to their timeline because again, that's not something that they've ever been particularly good at historically. So. But I don't see it not happening. There's too much has gone into Manchester, and now if you're some of those large organisations that have moved there already based on that long-term plan, they're going to have something to say about that as well. As will overseas investors that have put money into the project. So it's got to happen. Whether it happens on time is a whole other story.
That's a story for another day. See if they get there.
Exactly.
So another question that I wanted to ask you, and this is more so on the stock side of things, and when we're picking out investment opportunities. But from your perspective, what sort of yields should our clients be looking for in, let's just use Birmingham, Manchester and Liverpool as examples to start off with. But what would you be suggesting in terms of yields that our clients should be targeting or looking for really at the moment? Just an average.
Yeah, so it's a good question because obviously all the time I speak to people and they say, I need to get 8-9% yield. There's no logic behind what they're asking for. When we're looking at investing in cities, such as the ones mentioned, obviously you'll get slightly better traditionally in Liverpool at the moment because the entry point's a bit lower than the Birmingham and Manchesters. But as far as I'm concerned, if you can get 5% yield, That's good enough. What bank has given you 5%? None. What we've got to look at is the whole plan in terms of, okay, you're getting yield, perfect. But the best part is the capital growth, and what we want is a combination. So if you're getting at least 5% yield or circa percent anyway, that covers your costs and you're left with profit.
Yeah,
that's all you want from a property, because the plan is you will own this for a reasonable amount of time, and it will be worth more money when you come to exit investment. It will be worth more money than what you bought it for. And I think that's where people get confused. They read on TV, online, or they watch TV, and people state you need to get such and such yields. Well, look, the only place you're going to get those sorts of yields is if you go to the cheap and cheerfuls, of which people in our industry call them cheap and cheerfuls. Will they get you great yields? Absolutely. But when you come to sell, are they going to be easy to sell, and are you going to make good money on them? Probably not.
No.
But so I think it's from an investor's point of view, what side of that fence you want to sit on. One there, you've got a combination of capital growth and a reasonable yield, or high yield and no capital. Okay. So I think for me, especially hands-off investors, you should always be looking at the combination of the two.
I think that's a good way of putting it. In cities
like the ones we've the ones we discussed, I do have people phone me and say, "Oh, I want 8%." You're getting 8% in these cities. I'm sorry, but that's not the way the world works. It's just they've seen or read it somewhere and they think I should get 8%. Well, look, you can get 8%, but not in those areas. No. You get certain situations where you might sneak in the mid 6% ways, but I don't see that too often either.
I think that's true. Yeah, I think like you touched on there with people reading things online or finding articles and all sorts of stuff. And on my phone every day or on LinkedIn, whatever it may be, I see things pop up saying 9% 10-year assured rentals, and just think, how is that even possible? So it just goes back to doing your research in a sense for these people that are coming across these options. There's got to be a catch at the end of the day, in my mind at least. I could be wrong, but absolutely. There's definitely some form of a catch there, as good as they sound.
There's got to be some form, but you can't, like I say, you can get, if you go for the cheap and cheerfuls in areas that haven't got regeneration projects going on, then you can find investments that give you that return. But it's about if you're an investor, it's different to just buying a property because you want a property down the road that you rent out. If we're talking about an investor, you're investing for the long term, the right type of investment, and that's got to be a combination of what's my exit strategy. Obviously, I do know developers and investors just buy them with no real exit strategy. Fine, go and find your cheap and cheerfuls and whatnot. It doesn't matter. But if you're an investor who's considering one day I will want an exit strategy, that's when you need to think about where you're investing properly. Definitely.
I think that's a good way of putting it. Having a plan, understanding what you want to do with your investment and what your intention is come disposal of the property as well. But yeah, definitely. I agree with what you've said there.
100%.
It is an important process. Now, talking stock-wise, and we'll wrap it up shortly, but talking about stock, is there a piece of stock at the moment that you would, put your life savings on it if you had an opportunity to buy whatever you wanted at the moment? But are you working on some stock at the moment that you'd really like to tell us about, that you think is worthwhile people knowing about? I'd be keen to hear what your take is on that.
Life savings are hard one. I'm not much of a, what I'm like, but we're working on some at the moment, and I think we've got options in terms of different investor points. If you want a lower entry point, we've got a fantastic one on the outskirts of Manchester at the moment in Bolton, for example. And again, people forget Bolton is part of Manchester. It is. So what are you doing in Bolton? You're getting a lower entry point because they're, when we talk about the ripple effects, London started it and it filtered out all the way out to Winchesters and the likes like that. So what we've got to think is Bolton is actually only down the road from the centre of Manchester, and you can get into any easy entry point. So for me, I'm not going to say it's one of the best developments in terms of my favourite developments we've launched, but it's definitely one of the best developments in terms of price point and entry into an area. So that's in Bolton, where we've got. Again, I'm focusing on Manchester here just because we've managed to secure a couple of developments at good price points. But another one, which is in Old Trafford, again, we've managed to secure it that the entry points are quite good for that area. So they're two really, really promising ones. Obviously, we have the other type of investments when it comes to the higher price points, which we tailor. But for me, in terms of hot ones that aren't going to be around for too long, then they're the two. Them
Bolton.
two, the price point for where they are, they're going to fly. It's as simple as that, really.
No, definitely.
And I would quite happily invest in both of them.
That's good to know. We've had a look at the Old Trafford one together, and it looks impressive. The floor to ceiling windows as well, and it almost looks like the owner occupier style stock. Exactly, big rooftop terrace, and it's very well finished. They've done a very good job of it.
It is very much.
Yeah,
it is. And then the other one is obviously the one in Bolton is more finishes in 5 months completion would happen, that one. So that one's a bit more ready to go. Yes, you don't roof terrace. However, you're getting a great entry point into a very strong market.
Exactly.
So I just wanted to clarify on it because I get asked all the time. Have we seen a demand for outside of cities bigger than we've seen in a very long time? Absolutely. I mean, it's been phenomenal. However, that has not affected cities whatsoever. Even London, who on their own accord, I would say struggled over this COVID experience. They're not at a loss. So, they've been I would call the worst performing city in the country, London, because a lot of people wanted out to go to their country retreats or wherever. You know where I live. So a lot of people did that. But have we seen that effect? Well, no, we've already talked about where the strongest performing ones are: Manchester, Birmingham, Liverpool, outperformed everywhere. So have we seen a demand change? Yeah, we have, but it hasn't stopped those areas, because what people forget is they are the new cities, really, for the country. So no, I think it's something you mentioned to me before. Yeah, I thought I'd add it in there. Yes, we have seen unprecedented demand for outside of city stuff, where prior to COVID it was a little bit stagnant. We look at the South Coast, it was a little bit stagnant. What COVID done for the South Coast is just injected it into with these people. But there's so many people wanting English property, UK property.
It's a good point, actually, on the secondary cities. I think as well, you've got those three or four major secondary cities, which is the ones we have discussed this morning. But now, like you mentioned, we're seeing a shift for even the lower tier secondary cities, in the sense, places like your Sheffield, places like your Prestons, as you mentioned, Bolton is another area.
Preston.
Yeah.
Gosh, Preston just got a sign off of. They're going to be building the I've got a mental block here. Yeah, you can tell we do it live. They've just signed off a large build project that will be built in Preston. I think that wouldn't have. I'm not sure whether that would have happened if it was COVID didn't come around. I don't know.
18 months ago.
That's been signed off for Preston. Yeah, which is phenomenal. I'll have to come back. Remind me when we're off for this. I'll clarify what that is. But I'm having a mental blank. I've pre-warned you about my last few days of being a dad and husband.
Sleepless
nights. The last few nights has been sleepless. But that would that have happened prior to COVID? I'm not sure.
That's I
mean,
point.
We predicted Preston to have a good growth prior to COVID, but that might well accelerate things. So so even
that's a good point.
Maybe not secondary cities, but what would we call them? Third
subsequent
cities as such. They've seen a real demand that they wouldn't have seen prior to COVID. So it's actually good for the market as a whole, because the reason the English property market is always so strong is because there's hundreds and hundreds of different markets, and it just drives it forward. Whereas if we look at other countries, and I won't name any now because obviously I work all around Europe and Russia, but certain countries are one big market, bar maybe one area, maybe two at max. The problem with that is the reason their markets are so stagnant and go backwards is because there's nothing driving it. Whereas in the UK market, they're all different. Portsmouth is different to London. London's different to Chester. Chester's different to Birmingham.
Yeah,
so
exactly.
Forth. So
they're all
it's really great.
markets.
That's why it's absolutely manic.
Yeah, exactly. That's it. I think another one worth noting actually is Nottingham. Nottingham's an interesting one at the moment. I guess it's a very student-centric place. But there's a lot happening there, a lot of development happening in Nottingham at the moment, and it makes a very sound investment, similar to the cities you mentioned earlier. But it ticks a lot of boxes from an investment standpoint. And I think Nottingham's another one.
Been kind to that.
Yeah,
COVID's been kind to Nottingham as well, because again, it's sort of that city living, but in a slightly different way. So it's another one that's performed really well, and we sort of thought it would do well anyway. But again, that's had, I think, I can't remember the top of my head, but around an 8% increase in the last 10 months.
Yeah, it's impressive.
Brilliant. So COVID's done very well for Nottingham as well. So
definitely.
It's really good. I mean, it's never a bad time to invest in England. So I'm biased, but I know the history. So
exactly. No, definitely. Well, no, that's great. And thank you for joining me today. Really appreciate it. Thank you for jamming it in your diary. We got there in the end. But we'll have to get you back on the show. Get you back on the show in another 3 months.
Always.
And do another update. But thank you once again, Charlie. Really appreciate it. And I hope you have a great
Thanks for having me.
No problem. And thank you everyone who's tuned in today to listen to Charlie and myself. I hope you've got some value out of it. And liked our knowledge sharing from a UK investment perspective. But we'll keep you posted on the next podcast. And please don't forget to like, comment and subscribe. We really appreciate it. And we'll get back to all of your comments. But thank you once again. And we look forward to the next podcast. Thank you, Charlie. We'll speak soon.
Thanks, Chris. See you.